want to ask you about your biggest win as an investor. What have been key traits?
The number one and two is the team. The reason we are where we are is because of the people that I've met along this journey. Right? Our biggest challenge was we were early to the market. There's a famous quote from Anderson Horowitz: being early and being wrong are the one and the same thing. My brother always used to say that experience is the most expensive teacher because everybody else is underpaid. Unless you've gone through that, the ability to see around the corner does not exist. Experience is by far the most expensive way to learn something.
What do you feel have been the biggest lessons from that first fund?
Stick to your knitting. We had expertise in enterprise software and our B2B businesses. Common sense only goes so far.
Vaibhav, success is not binary, but what does success mean to you?
Deep question for us, and you're right. It's not binary. It's means many different things for many different people. From my standpoint, I think there's a poem. I think it's, I forget the author, but it's if one life has lived a better life because you existed, is a good way to look at success from my standpoint, right? So it means different things to me. Again, for me, it's all about the people, the ecosystem you live in, and is the ecosystem better off because you existed and did what you did, is a good measure of a success. And that ecosystem, your family, your professional colleagues, your friends, and the broader ecosystem. So
The reason I wanted to start off with that one is because you had a very interesting journey. You've come from an interesting background in engineering. You've gone into venture capital, and you're running a company now. And I wanted to start off there because I think about your journey, and I think about what success means to me, and all the different founders and investors that I've met throughout my career, but in particular during this journey of Inside Silicon Mind. I guess let's start from the very beginning. I'd love the viewers and the listeners to get a overview of your career and where you started and how that's evolved to where you are today.
I started my professional life. I went to college, got my undergrad, got my master's back in India, started working there as a programmer, and came to this country about 30 years ago in that same capacity. And I've been fortunate enough. We have been blessed with a very good and exciting journey. Software is the world I live in, so that's my professional life. So I've seen it up close and personal as a programmer, going up to managing teams, managing projects, managing P&Ls, managing and now managing companies. And so that gives me a very interesting perspective of how software impacts enterprises from a very deep in the trenches, and you take the very top-down view of it and kind of get that whole broader perspective. So that's been my journey, and I'm very thankful for that, because it's not that everybody gets to kind of see that whole picture.
What made you decide to go into venture?
So how we got into venture, prior to getting into venture for us, I've been very fortunate to work with a team that has been together and been successful in many different areas. So we started as operators. We had a couple of very successful exits. And the last company we exited out of was started here in Folsom, California, and it was a services company. And we tried to raise capital for that company, and it was a very interesting experience. We'd never dealt with the world of venture capital before, and we thought we had a very good background and a pedigree of making this business successful, yet we raised exactly $0. And there were many reasons for it. We were in Sacramento, we were in the services world. We knew we had a sound business plan and that we could execute to it, and we did. We ended up being very successful over 5 years, had another exit. But a big part of that whole journey was that, hey, there are other companies that are like us that can benefit from some capital and operational expertise, and they don't get that opportunity, especially in underserved areas like Sacramento, for example. So that was the genesis of Moneta Ventures. Lokesh, who was the founding partner for Moneta Ventures, had a very clear idea. He was like, there's more companies like us that can do really well, and we should do our part for that. And that was the genesis of starting of Moneta Ventures, right? We'd never been VCs before. We had never taken money from VCs before. So it was a bold, naive move at the same time, to say we can make an impact. And that's how the journey started.
I want to unpack this because it's interesting. There's a few things there that I feel like are critical talking points. One, Sacramento, building a company there, exiting that business without any venture capital money, realizing perhaps the talent is there, but maybe the financial ecosystem doesn't exist there, at least not to the extent of Silicon Valley, and then decided to build that in Sacramento. But I want to go back to your raising period, raising that capital to build the fund. With your background, and I know you've had the success as an operator, but did you find it challenging to raise LP money for the first fund?
Very interesting for us and a great lesson for us, right? And we talk about this all the time is so what had happened prior to launching Moneta is, like I said, Sparta Consulting was the company we had started here. And since we couldn't really raise any outside money, it was funded by the employees, right? And fortunately for us, it became a huge success. And everybody who invested in Sparta, all the employees did really well over a 5 year period. So when we started Moneta, there was this whole ecosystem of people who had been very successful with Sparta, and they were like, "What are you doing next? And we can trust you with a little bit of it." So it was a little bit easier from that standpoint in the sense that there was a success there and there was a team that believed in us and people that had tasted success with us, and so that gave us a little bit of a critical mass, and then the team itself contributed to a thing, and then we got to our first fund. I would say we started at a step 6 or 7 instead of a step 1 of that fund given our prior successes and as operators, and I think that helped us for sure. But it was a interesting thing for us when we were doing Sparta. We had the exact background to run that business. We knew what we were doing. We had an exit plan for 5 years. It was very difficult to raise money. But then when we went to VCs, we says, well, we don't really know what we are going to be investing in it. But here we have this general idea, and I think we can do well for you. And it was a lot easier raising money with that thesis than the other thesis. Kind of interesting experience there.
Do you feel like they backed you because of your success as an operator?
Absolutely. At the end of the day, they saw the team in action, right? I mean, it's very hard to start a company from scratch, grow it to $100+ million and exit out of it over a 5 year period. That's only somebody who's been through that journey really understands the nuances of what it takes to do that. And that was very obvious. So I think that played a big part in kind of giving the confidence to our investors that, hey, we know what we're talking about. We've done this before, and it just speaks to a lot of things. Your competency, your principles, how you approach things, and all of that. So yeah, definitely, definitely.
What was the nature of the LPs? What sort of backgrounds are we talking? Are we talking high net worth individuals, institutional money? What sort of pedigree and archetypes of people invested in that initial fund?
For our first fund, it was a combination of folks that had worked with us before in our prior ventures and had seen success with it, high net worth individuals in the Sacramento area and things like that, and a very few of them. But that was the bulk of it, right? Not much of an institutional thing for our first fund. That came with our second and third fund, institutional investors.
What do you feel have been the biggest lessons from that first fund?
Stick to your knitting. We had expertise in enterprise software and our B2B businesses, and everywhere would we strayed to like a B2C kind of a scenario, or out of that, common sense only goes so far. You got to know your knitting. And so good lessons from that. You got to be a quick learner, learn very quickly. Again, Lakesh and I talk about this all the time. One very early advice that we received was very interesting, and we didn't quite appreciate it when we received it, but it turned out to be the right advice, which is, as operators, we tend to focus on problems. So if we see a problem, we zoom in on that problem, and we're like, we're going to solve that problem, right? Come hell or high water, we're going to solve this problem.
Yeah.
Not quite a good strategy when it comes to a portfolio of companies. You probably want to focus more on the companies that are doing well and see how they can do better, versus trying to look at companies that are not doing well and try to kind of get in there and fix that problem. So that context switching, that mental shift of saying how you focus your energies and go from backing your winners and helping them become bigger. And you obviously help every one of your portfolio company, but just how you kind of distribute that effort and where you focus on becomes very important. Very good lesson to learn. And that's a big shift from an operator mentality to an investor mindset.
And just really quickly, how much did you raise for that first fund?
The first one was $25 million.
$25 million. Okay. Yeah. And when you think about the value that investors bring to a fund and the value they offer to founders, besides the capital, let's put the capital to the side, but in your opinion, what value does a venture capitalist, a partner coming from a VC firm, offer to a founder?
So there are two, right? There are partners and there are LPs, and they have very different value
Sure.
propositions, right? And in our case, again, coming from an operator background, I think we brought a very deep expertise in terms of, hey, the do's and don'ts, especially when you're a small company trying to grow. Everything from how do you set up simple things like the back end of your HR and what benefits you should offer and all of that, all the way to what your sales strategy should be and that spectrum of it. And I think those are lessons you want to learn early and quickly and not spend too much time learning. So I think that's a value that we bring as partners to the table. And just because we come from that and we live that founder's life and that operator's kind of life, there is a natural empathy to the founder's journey, right? So we are in most of our board meetings, we are a lot more aligned with our entrepreneurs than we are with the rest of the investors. Generally speaking, just because we just we lived that life that they are going through, and we probably can see where that can go. So I think that makes a big difference. So I mean, Manette has been voted, I think, 4 times now as one of the most founder-friendly VC firms that's out there, right? And that's a natural result of where we come from. And then one of the other unique things, because we have such a vast network of LPs that are investing in us, the number of opportunities they bring and connects that they bring for our portfolio companies is huge, right? Because we have investors in all walks of life, everywhere else. And so for us to say this company can use connects in this ecosystem for these kind of opportunities is very easy. So that's another big advantage that folks have when they come to this. So.
And how long has the fund been going so far?
10 years now.
10
We are
years.
into our 10th year, so we're on to our third fund now. And so it's been quite a journey, yeah.
How much have you raised in total over the three funds?
So total now we are just under 400 million of assets under management for us. Yeah,
Nice.
so
And
it's
you've
been quite
you've
a journey from starting no VC to a
yeah.
$25 million to our third fund now, which is a $250 million fund. So
That consistency and that longevity and success and conviction from your LPs, I'm guessing you've evolved from not only high net worth individuals, you've gone to institutional investors in fund two or three.
absolutely. So our LP profile has definitely kind of evolved. So we started with high net worth individuals, and now we have a bunch of banks and institutional investors starting with our fund two, and that actually footprint has extended in our fund three. So yeah, it's definitely
Sure.
a different profile.
Now, if a founder wanted to speak to you today, they have an idea. What area of focus are you interested in? Do you have a specific thesis that you're going after, a specific segment in the market that you invest in?
We do, and it evolves for us, right? Because the world around us is changing so fast. But the core of it is one is business to business, right? We've learned that lesson is we want whatever our founders are doing, the fundamental business to business value proposition has to be there. That's point number one. Point number two is that it's software related, and now we've extended that to be technology related. So the whole AI world that's happening and everything else, I think we need to go beyond software to provide end-to-end value. And we have a thesis of saying it's software plus plus in the sense that the valuation vector should go beyond the software that you're offering, which is automating a workflow or whatever it's doing. It's either creating value because you collecting data and you're creating a data ecosystem as an example, or your technology is so differentiated that beyond your ARR, beyond the automation and the workflow that you're solving for, there's another valuation vector to that whole thing. And so that's the plus plus aspect of it that we look at. So that's how we kind of look at what the founders should be doing if we are going to be investing in them.
I want to ask you about your biggest win as an investor. You don't have to mention the company if you don't want to, but if you'd like to, that'd be great. We can unpack it. But what I want to ask you about that particular investment is when you think about that investment, what have been the number one, two, and three key traits of that business, whether it's the product, the team, the founders, the way the founders think, that evidently was in your opinion key characteristics of the success of of that company?
I think the number one and two is the team, right? It's the founder, the team that they have, and the idea, the product, all of that evolves, right? For us, they need to be in the general area that we're talking about, right? You're not going to go from a business to business to business to consumer kind of a scenario and all of that. But within that context, it's the team and the team because one thing we've noticed is it doesn't matter what we start with, it's not what we'll end up with. We don't know what we're going to end up with, but we know it's not what you started with. So the
Sure.
ability for the team to recognize that, to adapt, to evolve, and morph into what actually is going to be successful is really that foresight, that resilience, that adaptability are the key factors from our standpoint. And I think that's almost always proven to be the case. It's not a sufficient condition, but it's a necessary condition.
I love that, and I agree. I mean, as somebody who's in that world of people recruitment, I believe we're in a relationship business in venture as well. I think it is about relationships, the relationships you form with your founders, and supporting those portfolio companies. How often? Because I hear this a lot from investors. They say that it's the team, it's the team, it's the founders, and most times that pitch that they saw at the very beginning 5 years, 8 years later, it's a different product, or at least that idea was a segment of the journey. Things evolve over time. How often do you see that in your portfolio?
Every time. I don't think there's an exception. Now, the degree of how much the product has evolved might be different. In some cases, it might be just a little bit of a shift. In some cases, it might be a complete pivot. But yeah, I mean, for us, it's always, and that's why it's kind of important. And I know you mentioned I'm running a company today, and I've seen that journey firsthand
Sure.
as a startup. And what we've started to build and what we're building today is not different than what we always thought, but how we are going to market and what value we are presenting to our customers has dramatically changed over the years. And it's in direct response to how the market has evolved and all of that stuff. But I think that's not a unique journey at all. I think that's just how it goes. That's a
Sure.
necessary characteristic of a startup.
I mean, if we look at some of the most, and I'll ask you this question at the end in terms of what your favorite book, or at least a book you want to recommend. But if we look at some of the key books in our industry, books like Only the Paranoid Survive, Innovator's Dilemma, PMF is a moving target. It keeps moving, and you have to adapt. And I understand what you're saying, because even myself as an investor, when I think about investing, I look at the team and the founders more than anything, because what I want to see is if the market does shift, whether it's the macroeconomic economic landscape or the technological shifts that we see, like with AI, you're backing a founder that can pivot, can make changes quickly, and even sometimes adapt the existing product to the new market.
Absolutely. And one of the key elements of that for us is a successful founder has to kind of be able to see a little bit beyond what is currently happening. Like you got to see around the turn and the next turn and see how am I going to be ready for that, right? It's that famous saying of, hey, you got to be where the puck's going to be versus a cliche saying about it. But that's absolute truth because by the time what you're building becomes real, the market would have shifted. So how do you kind of, especially true in today's world, because with the AI world, it's changing so fast. So that ability of the founder to kind of see that, and then the ability to get the team to work with you to kind of on that journey and kind of move with you very quickly and adapt is the most important thing for you to be ultimately successful.
Vaibhav, I love your story. I want to now step into the world of App Orchid and where you are today. And I'd like to at least pay tribute to your friend, Krishna, who founded the company, who, from my understanding, from our initial conversations, is your first investment through the fund. I guess for the founders for the founders, the engineers, the investors, the guests, the audience that listen to our show, you've seen it all. You've gone from an engineer to an investor and now CEO of a company, but it's not your company, right? It's your first investment. And I'd love to hear your story there. And because I've heard the story, but I definitely like you to repeat it for our listeners because it's a touching story. What you said earlier on, you back the founder, you back the people. You are the embodiment of that because you're not only invested in your founder, but
Yeah.
when things unfortunately took a turning, you stepped in and you are today the CEO of that company. Just for our viewers and our listeners, tell us that story, please.
Happy to share for us. And it's definitely a unique set of circumstances and a little unfortunate to that point in the sense that So Krishna was the founder of App Orchid. He started this company, and to my earlier point about the vision has stayed so consistent. And his perspective, going back 10 years, was every insight that an enterprise needs to make their decision is in the data that they own and some external data, and that whole process of driving that insight from that decision can be automated and should be automated, and the technology should be solving that problem, not management consultants. That was the core vision of App Orchid, and he set out to build that and was incredibly visionary and very driven, and he started building that one block at a time. And unfortunately, at the beginning of COVID, he passed away, right? And when Manetta had invested in the company, that was our early investment from our first fund, and we believed in Krishna. And he was somebody I knew for a long time, but we really believed in his vision, his ability to execute. And so unfortunately, we found ourselves in a situation where he passed away, and then we were looking at COVID, and we didn't know what the world was going to look like. This was early days of COVID. And so a lot of uncertainty, a lot of lack of clarity in terms of what we do with this. So I stepped in, I was on the board, I stepped in as an interim CEO, and then I knew the team, and then we looked at everything and we said, hey, what Krishna saw is real, and we can make it happen. And so we decided to play the long game on it. I took on the role of a full-time CEO. We became the largest investor in the company. And I think we've done a great job of kind of not only executing to his vision, but keeping the whole team together, right? I mean, we want to be successful as a company, but we want to be successful with the team that we started with, right? That's one of our stated objectives. So we're living that aspect of saying, how can we support our founders, and how can we make it successful, and get it to its best possible outcome.
I want to double click and index on the story of the company and the market and the problem that you're solving. But I just want to spend a minute or two just really highlighting this point, because you said, and I asked you that question, what do you look for when you're investing? And you said it's the team, it's the founders, and you've become evidently this situation that you found yourself in since the pandemic. What was initially an interim role has turned into a full-time CEO role. But as you just said right now, you kind of just looked under the hood and you realize as a fund, there's something here. Krishna was onto something. We need to double click on this. This is a very interesting point, and I feel like for investors, it is buying. It's a relationship business. It's buying into founders, investing in founders. But you're a testament to that, believing in your founders. Honestly, lots of credit to you, because that's a very unique story and is an unfortunate one. But it's great to see that you are stepping in to drive that vision forward. How has the company progressed in the last 4 to 5 years? It's probably been 5 years now since you've taken over.
Yeah, it's been a typical startup journey for us, right? We've had our ups and we had our downs, and it's a roller coaster, but we found ourselves right now in an incredible position. And it's the vision coming to life with the overall ecosystem getting to where we need to be for us to be successful. So fundamentally, when we looked at the company, what we are solving for is the data problem for the AI world, right? And we'll double click on that if it makes sense. But it's more relevant now than it has ever been in the history of enterprise software. And thanks to Krishna's vision and the execution of the team, we find ourselves in a position to solve that problem in a better way than anybody else, without exception. And that's a testimony to what Krishna's vision was and what the team has executed to, and our ability to kind of believe in it and drive it forward, right? So they say there's a fine line between conviction and delusion, right? I mean, you could, and it's probably defined more in hindsight than in foresight, but that we just had a lot of conviction in what we were trying to solve for, and I think we find ourselves in that position where it's being proven to the market now. So very fortunate to be there.
I had Scott Dietzen on our first ever episode of Inside Silicon Mine. Scott Dietzen was the CEO of Pure Storage and most recently the CEO of Augment Code, now chairman of the board. And Scott has had an incredible career. And I remember we started off the first ever episode with a quote that he said. And it was interesting because he talks about conviction and you need to have that conviction, but you want to be optimistic, but you can't be blind and stupid. So I get what you're saying. There's a very thin line between being optimistic and being delusional. But to Scott's point, you have to have that conviction. You have to believe in what you're building. For me, when I think about the companies I run and my team, Harrison Clark, we we spend a lot of time talking about our vision and where we want to be in a year's time, in 2 years' time, but also reverse engineering that and making sure we make it happen with the small little inches every single day. How do you think about leadership? How do you think about building a company? Because we talked about backing the founders, that it's great to have a good product and a good problem statement to go after, but you're backing the founders because when the market shifts, you need to shift. In the last 5 years, as the CEO of the company, what challenges have you faced, and how have you adapted to to those challenges?
So I think our biggest challenge for us was we were early to the market. And I think there's a famous quote from, I think it's Anderson Horowitz. It's like being early and being wrong are the one and the same thing. All right. So, the core technology that we use to solve this problem, the ontology driven approach to enterprise data, was not something that the market understood, appreciated, or even realized it needed. So we were always putting solutions on top of it, where the core value proposition was buried under, and we're taking specific solutions to market to kind of solve a use case problem with the underlying technology. And so you're going through the classic product market fit thing. And we were successful. We built some very good, successful products on it. But the core value still stemmed from the underlying technology that we built. And so that journey for us to go from those individual solutions, kind of working through the product market fit and trying to convince the market as to why you need a technology like this, to now where it's completely flipped for us, thanks to ChatGPT and people wanting to say, I need to be able to interact with my data. And the biggest problem you have is now that missing semantic layer that you need to enable that journey. So for us now, it's flipped. Right now, the customer is saying, okay, I do need a semantic layer. How are you solving for that problem? And so for us to go through that journey, and you knew it, some of your team knew it, but it's hard to convince other people. And we've been fortunate enough to have, and some of our other investors believe in that in the long game, believe that this will eventually be the right thing to do, and just kind of keep that focus and say, we're going to continue to invest in this, we continue to build that technology and kind of evolve to get to that point. So that's very hard to do, because that conviction gets tested every day morning when you wake up and you have that call with the prospect, and they say, oh, that doesn't make sense, what are you talking about? And you're right, they're wrong, but they're the ones that you got to listen to and go through that journey. And you get through five of those calls in 3 days, and your conviction is going to take a hit, right? How do you recover from that? How do you get your team to still believe in the vision when you're not getting that feedback? But there's also an element of truth in it. You cannot ignore that feedback, right? You got to be pragmatic. And that's where I think the conviction delusion piece comes into play, because you listen, you understand what is it that they're objecting to, what they're not understanding to, and how are you going to fix that. And so you cannot ignore that just saying that, hey, maybe we're too early and people don't get it, but how do you incorporate that feedback and address that problem? There's no formula. You just got to get up every day, figure that out, and adjust it. But it's not easy. It's not easy by any stretch. And I'm sure every startup in some way, shape, or form goes through that journey.
That's an interesting one. I think about what you just said, and I wonder, and I hope you don't mind me putting the lens on this and just looking
No, no,
deeper,
please.
but I'm just
Absolutely.
thinking you're having customer calls and you're hearing yeses and nos, and it's important to listen to both, right? Very important to listen to your customers. But this, putting the conviction and aside for a second, do you think that sometimes as a founder, and I'm not talking about where you are today, but just generally as an investor, when you've seen founders do this, do you think sometimes they are hearing too much noise because maybe they are targeting the wrong market, perhaps the wrong ICP, perhaps they haven't really figured out who they should be speaking with, and when you think about that, maybe it's a GTM problem, maybe it's how you're approaching the market.
Oh, it absolutely is for us, right? But from an early stage startup person, you decide, okay, how do you figure out what your ICP is? And that's not a clear answer,
No.
right? And if you talk to 20 people, you will probably get 25 opinions on what your ICP should be. So the path to finding that ICP goes through a lot of customer interactions, a lot of discussions, a lot of internalizing that feedback and focusing, and then really making some bold decisions, because it's always a hammer looking for a nail. Every technology founder thinks they can solve that problem, that problem, that problem, that problem, and that's where it's a problem, right? the ICP journey goes through talking to a lot of people and trying to figure out, and we've seen that again and again. It's just not unique to App Orchid. There are other companies I sit on the board on, and they've had similar journeys. And you just need to have the ability to just go through that, internalize that feedback, the yeses and the nos, and hone in on what is going to give you the best chance of success. Nobody's going to tell you that, and it doesn't matter how many advisors you hire. You're going to have to do that journey yourself.
I agree. I feel like when we think about getting to that point where there's excitement about the product, the market is pulling you. It becomes less about trying to convince and more showcasing what the product is and how it fits into their ecosystem.
It makes a big difference. It's a game changer for a startup like ours, for us, right? Because you're not educating them on what a semantic layer is, what an ontology means, and you don't spend 50 minutes of an hour-long call conceptually educating the customers on what you're trying to do, versus it flips to how can you solve this? This is my issue with the ontology semantic layer. How do you build an ontology quickly? Why is your ontology better? And that's a problem I would rather have my team deal with all day long than trying to educate the market. One of the early companies that we worked with, the whole concept of offshoring was new back in the late 90s. And we started an offshore development center, and most of our conversations with customers would be, oh, how does the T1 line work? How do you communicate with India? How does the time zone difference work? And what kind of methodology use? And then Y2K came, and people had a compelling event where they had to all move to offshore. All those problems get away, and then all we had to discuss was, why are we better than some X, Y, and Z? Why is our team better? Why is our methodology better? Why is our value proposition better? Very different sale. And then the acceleration from that point to grow is very different than you got farther in the following 6 months than you did in the previous 3 years when the market shifted, right? So we're in a similar scenario here with the whole AI shift happening.
That's interesting. I think it's going back to my initial question. Success is not binary. There's no real right or wrong answer when we think about building a product, how you go about finding that product market fit, keeping your fingers on the pulse. One thing you said earlier on, which I'd like to ask you, there's a couple of things I'd like to ask. I'd like to ask this question around just really figuring out seeing around the corners. What did that mean to you? And secondly, I want to spend a couple of minutes just really unpacking App Orchid. And it's a very interesting concept because I feel like the consultancy business, it's a very expensive business, right? They charge a lot, and you are coming to disrupt that industry. Before we get there, let's just go back a little bit. I want to hear from you about the seeing around the corners. And is that like a founder thing, or is that like an investor thing? When does it become important? How do you even dissect that? How are you able to unpack that and figure out how do you see around the corners, and how do you see where the market is heading?
This is my take on it, right? And I'm sure different people have different perspective on it. My brother always used to say that experience is the most expensive teacher because everybody else is underpaid.
I like that.
Right? I mean, internalize that for a minute, right?
I need to
And
internalize that. I'm trying to internalize it.
yes, yes, because every other teacher is underpaid. It doesn't matter what you paid. By living through an experience is by far the most expensive way to learn something. Unless you've gone through that, the ability to see around the corner does not exist. It doesn't come from theories. It doesn't come from reading books. That's my personal opinion, right? And just applying it to the App Orchid journey, for example, I think Krishna's vision of what he was building, and it kind of delves into what you were talking about as your next question, but the fundamental ability to see that there is value in elevating the intelligence that built in individual applications and programs to an org-wide level and embedding it at the data layer itself. So you move away from siloed applications. It's something that unless you've lived through the enterprise software journey and you understand what an ERP system does and what an analytics system does and all that, you will not see the value in it. You will just not see the value in it. So because of our experience and what we've lived through, the value for us was very obvious. That was not obvious to most people, but for us it was obvious. And that's what I see, meaning the counter. I said it's just a matter of time that this becomes the critical part of an enterprise stack software. And trust me, we could be very wrong. Thanks to the LLMs and the AI revolution that happened, that it helped us get there. But it just doesn't happen without deep experience, right? Whether it's on the technology side, whether it's the domain side, I think you just got to have that depth. Otherwise, I don't think you can see through it.
That's a great quote. I'm going to have you say that one more time because we need to definitely use that one as a tag for this. It was experience.
It's and this is my brother's quote, and I've heard it growing up, and so it's ingrained in my thing. Is this that experience is the most expensive teacher because everybody else is underpaid.
I love it. That's great.
Yeah.
Um, Very, I love that one, and I can definitely relate to that a lot. Um, App Orchid, very
Yes.
interesting market. Just final thing I wanted to touch on because I completely agree with the philosophy here. I think if I have the data in my company, I should be able to see that data. I should be able to understand that data. Hiring a team of very expensive consultants to come in and unpack that for me and give it to me to read and understand is it seems unnecessary. So how do you solve that problem?
To define that complexity a little bit for us, let me just step back for a second and see
Sure.
if your typical enterprise that has evolved, doesn't matter whether you're a $500 million enterprise or a $50 billion enterprise. The whole evolution of enterprise software has been that you build applications to solve specific problems. There's a CRM application, there's an order to cash application, there's a plan to make application. And so fundamentally, each application is catering to a siloed process and solving it really well. And so now the data for is embedded within those applications. But to make an enterprise-wide smart decision, you need to understand an end-to-end kind of scenario. You need to know what's happening in your CRM process and how does that relate to your manufacturing process. And the way the enterprise stack has evolved is the data is incredibly siloed. It's buried into this. And so the whole exercise of manage a consulting business or the analytics business is to extract that information and then have a bunch of people come together and interpret that information for you and then present to you and say, oh, this is how you should improve your call center matrix and stuff like that. And so what the way it's approaching that problem is to say that whole siloed information needs to be unified, right? And it's a difficult technical problem to solve. And the traditional approach to that has been to build large data warehouses where all the data is now moved into these data warehouses. And so now you have a unified view. Makes sense. It's also very expensive, time consuming, and does not give you the results because it's hard problem to solve.
Sure.
So the way we are looking at that is we say we build what we call a knowledge graph of all your data as where it stands. And we give you a very smart way of saying, hey, here's your customer. I'm just going to make it very straightforward. And the customer information, part of it's coming from Salesforce, part of it's coming from SAP, part of it's coming from Snowflake. But don't worry about it. You ask what you want of your customer, and the fact that that customer is called John in one, Jonathan in another, and Johnny in the third, also don't worry about it, right? You interact with your enterprise data and don't worry about the silos, and we will solve that whole complexity for you behind the scenes. And we do it in a very elegant way, right? We solve for the federation problem, we solve for the semantic enrichment problem. And so your AI, whether it's in form of natural language queries or agents, can interact with your enterprise data without having to worry about any of that stuff, right? And it's very elegant because we are able to provide, we don't embark on science projects, right? We are showing you value in a matter of weeks, which is very important. So the pragmatism of delivering business value at the same time solving a very deep technology problem is essentially what we are about.
It has been a pleasure having you on the show. I've taken a lot from today, and you've been a great person. I've known you for a very very short period of time, but I've got to know you to an extent where I understand that you're somebody who holds on to certain very important values, humility being a very big one, as you and I had discussed on our first call. But you've had a very very exciting and successful career, and you've touched on all different aspects of technology, being an engineer, being an investor, and leading from the front, sticking to that philosophy of backing founders to the point that you step in and become the CEO. I really love that story. I want to ask you one final question, which is a book recommendation. We'd like to always end the show with a book recommendation. So, do you have one that you feel is one that the listeners and the viewers should read?
I'm actually reading two books right now, Firas, and it just happens to be the reason I'm reading two books is one is on Amazon, on my Kindle, and the other is not. And so, depending on where I'm reading it, I read. But one is Until the End of Time by Brian Greene, and the second one is Our Mathematical Universe by Max Tegmark. And they approach the same problem of what is reality from very interesting perspectives. And I think it's we all read all the management consulting books and stuff like that, but it's good to zoom out sometimes and
Yes.
understand the bigger context of what you're doing. And I think it's a great thing for every entrepreneur or anybody to do, just because it clears your place in the context of the big picture, and then it always helps. So that would be my recommendation. Pick any one of them. It's very interesting, the two people coming at it in a couple of different ways.
Thank you so much. It really has been a pleasure. Thank you for the book recommendations and for making the time today on being a guest on our show. And hopefully we could do this again down the line in person. I really appreciate it.
I appreciate it, Firas. And then my parting thought, I would just say, I think we touched upon a lot of topics, but my personal, I think, journey, however you define success, the reason we are where we are is because of the people that I've met along this journey, right? On the personal side, on the professional side. And I think what you contribute to the whole thing is probably a very small percentage of what it is. And you should never lose sight of that. And it's very easy to lose sight of that. So I just want to give a big shout out to all of those folks. So thank you.
Thanks for tuning in to another episode of Inside the Silicon Mind. This podcast is powered by Harrison Clark. For more episodes, don't forget to subscribe and hit that notification bell. As always, stay curious, stay consistent, and stay inside the Silicon Mind.